Gold and silver are considered safe haven bets, assets that rise when the world is on edge. Conflict breaks out, investors panic, and money floods into precious metals. But that is not what's happening right now. Since the war in West Asia began, gold has fallen by more than 10% and silver by over 22%. Both metals are doing the opposite of what most investors expected. But why? To understand the reversal, let's look at where these metals stood just months ago. In 2025, gold surged over 75% and silver gained more than 165%, outperforming virtually every major asset class worldwide. Early 2026 saw record highs, gold at $5,500 per ounce and silver at $121 per ounce. As of 6th April, gold is down more than 16% to around $4,680 per ounce, and silver has plunged over 35% to about $74 per ounce. Now, there was an initial spike when the conflict started, but it did not last. Analysts say the market had assumed the war would be short. When it wasn't, the calculus changed entirely. The conflict disrupted oil supplies, pushed energy prices higher, and stoked fresh inflation fears. The biggest factor is the strong US dollar. During global crisis, money does not just move into gold. It also flows into the dollar and US government bonds. A stronger dollar makes gold and silver more expensive globally, reducing demand, especially from non-dollar economies. With rising oil prices, markets now expect fewer rate cuts from the US Federal Reserve, meaning interest rates may stay higher for longer. That matters because gold and silver do not earn interest. So when rates are high, investors shift to interest-paying assets like bonds, and precious metals lose their appeal. History backs this pattern. During the Russia-Ukraine war in 2022, gold rose 4% in the first week, then cooled off. Silver jumped 6%, then lost momentum. Also, during the India-Pakistan tensions of 2025, prices stayed largely flat. The pattern is consistent: a short burst of safe haven buying, followed by a pullback once the conflict settles into a prolonged state. Now, silver is under more pressure than gold for a specific reason. It is also an industrial metal. Nearly 60% of global silver demand comes from electronics, solar panels, automobiles, and semiconductors. But war slows economies. Companies delay investments, manufacturing weakens, and industrial demand drops. That's why silver is falling faster than gold. So, which metal makes more sense in this environment? Well, right now, the answer depends on one's risk appetite. Analysts say gold is more stable, still seen as a defensive asset with prices likely to move sideways with a slight upward bias. Silver, on the other hand, is more volatile, reacting to both financial markets and industrial demand, leading to sharper falls but also greater upside potential. So the broad consensus is that if investors' goal is safety and wealth preservation, gold stands out. But if the goal is higher returns with higher risk, silver could outperform. Follow for more stories.